Oh, did it again?
Morning, everybody.
Morning.
23rd of December.
It's
Last
been a
one
long
of the year
year.
for us.
Yeah.
It's been a long one. Was you clicking the button at the same time as me? Is that what happened?
No.
Oh, right. I must have just
I
double
didn't-
clicked it then.
Yeah,
Fingers
yeah.
too quick.
That's trading too much, that is.
Yeah, too eager to get away. Okay, good morning, everybody. Welcome and thanks for joining. It is our last stream of the year before we break for Christmas. And what a year it's been. Been pretty good, I think, Steve, for markets all in all.
Overall, yeah. Overall, I mean, the markets have been very, very difficult. And it's been a bit of the Santa rally lasted one day, didn't it?
Yeah, absolutely.
So, yeah, I mean, between
Proposed again.
now and New Year, I think we'll have very, very low volumes. There's a lot of people just, desperate to get away from it. But
Yeah.
there's some people out there who still love the game.
So those
So,
are probably the people that should step away from it.
yeah, maybe. Or maybe they're just like getting in early for the opportunities for next year. So, I mean, 2023 will be, I think, a very defining year for lots of things, cryptos, indices. So, yeah, we're sort of heading into some rocky waters. It's not rocky waters, is it? Choppy waters.
Choppy.
Yeah.
That'll do.
Yeah.
Okay, cool. Right, let's get on with the last headlines of the year then. Well, there won't be the last headlines of the year, but they're going to be the last ones that we're going to go through because we are done as of today. So let's just bring those up. We've got firm US jobs data yesterday. The US initial jobless claims increased marginally to 216,000 in the latest week from a revised number of 214,000 previously, and were again below the consensus forecast of 222,000. The US GDP numbers was revised higher as well. The final estimate of third quarter GDP was revised higher to 3.2% from 2.9%. with a further upgrade in consumer spending. We saw US yields edge higher yesterday. Treasuries lost ground after the stronger than expected US data releases, and the 10-year yield closed close to 3.7%, although trading volumes were low. We saw equities retreat, notably in America. Wall Street posted sharp losses on Thursday, with notable selling after the market open, with further sharp positioning adjustment and an ongoing debate whether 2023 outlooks can justify buying at these levels. The US indices did, however, recover from intraday lows in very choppy trading. Today, we've got the PCE prices data. Liquidity in global markets will be very low during the holiday period with no major data releases. On Friday, the latest US PCE number will be released, which will be important for expectations surrounding monetary policy. The consensus forecasts are for the core annual rate to retreat to 4.7% from 5%. So this will be the kind of last data point of the year of high impact, and with low volumes being in the market at the minute, it could be a pretty erratic outcome as a result of that in a few asset classes. So Steve, let's wrap it up for the year. Let's take a look at Bitcoin, and maybe you can be a bit more forward looking and sort of give some opinion on where you think 2023 may go for some of these cryptocurrencies.
Absolutely. There's let me share my screen. There's not really a lot to say about it on a short-term basis. Like this week, in fact, we've had a very, very, very quiet week indeed. The overriding weekly chart is the one to watch, really. I mean, we've had a major breakdown below this 28,000 level, which was the June 21's swing low, and we obviously made a higher low at the start of the year, January 22. But then sort of like the short rally was capped off in April, got up to just below 50,000, and since then we've been on the back foot. I can't see this changing much next year. This seems to be sort of like quite a breaking down pattern. You see lower highs forming, and now we've got a barrier of around about 20,000. Could have a little spike around, over the next week or so. But I think last week's shooting star candle is pretty negative indeed, and should open up an attack on the sort of like the tend to sort of like 12,000 level. That's where I see it going next. I see lows. I see it going lower than that overall. If we look at maybe we can get the volume indicator up. Just give us a little bit of a visible range profile. So that's where we can see that 8,000 is where most of the volume has taken place. If we really go back a long way, it's probably around about the $1,000 level. So that's where most volume has taken place over time, and we've had this huge spike up in between. If we look since the sort of like I suppose the retail customers started getting in, we can see sort of two major levels between the sort of 28,000 and the 48,000, and there's a bit of a vacuum then between 25 and 28. And then we've settled around about 20,000, but it feels like we've got to distribute a bit lower as well, maybe all the way down to 4,000 next year at some point. It wouldn't surprise me. I think we'll see this pressure continue into the new year. Yeah, so from a daily perspective, as I say, we've broken down. We're below the resistance now between 17.5 and 18,000, and just under pressure. All the moving averages are pointing lower, and yeah, not a very merry new year for cryptocurrency in my eyes. Let's take a look at gold. Gold's a bit more of an interesting one. This is, I'm thinking, for a bit of a rocky ride. It's all really based around what happens with the dollar. There'll be a bit of safe haven pull as well on this in the new year. We've had a decent crossover of the 5,500-day moving average in December. So I think we have got potential for further uplift. At the moment, the 1765 level is holding. We're above the 200-day moving average also, although in the last couple of days we have had a pullback from 1824. 1844 and the 50% Fibonacci retracement 1842 is a measured move target for this double bottom formation. So overall, really looks a little bit more positive for gold, although we did manage to sneak a little win out of that yesterday, going short against the trend after prices stalled around 1824. We'll talk about that more in a minute. Silver, again, similar sort of bottoming pattern, and quite a clean inverse head and shoulders formation. Excuse me. The measured move target for this is around about $25, and we're expecting to see that sort of like kick higher over the coming weeks and take that level out. We've seen dips being bought all the way up, so it looks pretty decent. Also getting a crossover with the 55 200-day golden cross on silver, so that's supportive structures to look at moving forward into the new year. Copper's the jury's out a bit on this, but if we could continue to get dollar weakness, we should see this improve slightly. Again, we've got a crossover from the 55 and 100-day moving average, and potentially getting a crossover in the not too distant future with another golden cross here. So looks like we've put a bottom in place in copper and higher prices once we get above that $4 level. Oil has been under pressure since the early November, really, when we broke down from around about the $93 level on WTI crude oil. We broke below the 5,500-day moving average and have been negative since then, although it does again look like we're trying to put a bit of a bottom in place. Compared to this time last year, we were down at $66, and we had that huge spike. We doubled 100%, got up to $126 before seeing a sell-off, almost the entire way down to $70 we traded before this nice little bottom, higher low put in place. So again, I think we've got some decent upside there. And Brent crude oil, same sort of price action, but different levels. Obviously, it trades at a premium. The premium's not so much now. Currently, just under $4 above WTI crude oil. But again, it looks like we've put a bit of a bottom in place, but really need to hold above this 82 level to see that out. And natural gas, I mean, that's been elevated for most of the year, got up to sort of like close to $10 at one point, but we're halfway down or 50% down from there. trading just below the $5.33 level. This is the level I said watch. The head and shoulders formation playing out nicely. We've got a nice crossover on, I mean, this is a death cross, the 55 and 200-day moving average crossing over to the downside. So potentially further downside for natural gas. $3.50 for me is the next level of support. I won't be surprised to see it move down there in the new year. That's about it for me, Joe, on that.
Thank you very much.
Idea of the dollar.
Okay, let's take a look then, shall we? And let's go. I tried to clean my chart up a little bit on this today. So still looking as though we've got, well, we definitely do have a head and shoulders top pattern here on the dollar index. But as we can see in more recent sessions, it looks as though maybe we are trying to form some sort of wedge formation, which potentially could break to the upside, forming some sort of ending wedge, and we could maybe see a correction higher. Now, obviously, we've seen a lot of selling in the indices of late, and if we start to see this push higher, then that may indicate that we're about to see some dash, if you like, to safer haven assets, the dollar being one of those. So if we do get the breakout of this wedge, then that may indicate we're in for a bit of a tougher time with some of these equity markets. And I think if we do get this break, I don't envisage it being a massive kind of move to the upside, just really something corrective really into that kind of region there, potentially a bit higher, maybe into this kind of region here, which is the underside of these previous lows. So I do think that we may be in for a period where the dollar will recover some of the losses that we've seen in recent times, but then maybe what it will actually do is form some sort of larger top pattern and eventually move lower. So I do think 2023 is going to be a better year for markets, but I don't think it's going to happen immediately. I think there might be a period of weakness, certainly in risk assets to start the year, but then eventually we might see more appetite for risk at some stage later in the year. So for me, in terms of projections, I think this wedge, as it's building, has the potential to break higher, to see some sort of corrective upside rally in the dollar, potentially as high as 109.53, at which point I think we will still see some appetite for risk come back into the market, and then potentially dollar heading lower, maybe towards these 50% fib levels and 61.8% fib levels on the downside. So that's kind of my projection for where dollar's heading. But at the minute, it looks a bit trapped. We may see a reaction today as a result of the inflation number, the PCE number, and obviously being low volumes in the market, there might be quite an erratic move higher. So potential for a break higher from that today, I think. Let's take a look at Euro US dollar. We can see prices continue to stall around this major resistance level here that we've got on the chart. I've got a number of drawings on here, which I'll just try and clean this up to make it a bit easier to see. So it looks as though prices are stalling here. We can see a number of long wicks on these candles and not really able to close above this 106.57 level. We obviously did have a push up on the 15th of December to that 107.36 where prices then rejected. So I think, you know, if we are going to see this break on the wedge of the dollar index, then this is likely to pull back maybe to this kind of region here to find some support at 103.40. Maybe we get some consolidation there to confirm this bigger base pattern that's in place, and then maybe we can start heading higher on Euro US dollar, potentially over 2023 towards 112.75. Let's take a look at cable. I did some interesting annotations on this yesterday for a corporate FX company. So we've seen a rally into a resistance level at 124.30, as we can see highlighted by this blue line, and we've seen a pretty strong pullback. If we look at it on an intraday basis, you can actually see a nice head and shoulders top pattern has formed here. And we are rallying into the neckline of that this morning. So that might be my guns at the head trade today, given that we have seemingly completed a head and shoulders top pattern on the 4-hour chart there. Looking really for a sell at around 120.87 if we get there, but I'm guessing I'll probably have to go ahead of that if I do get to do that on the gun to the head trade. But that looks as though it might be in corrective mode or about to set up in corrective mode. Maybe that's a leading indicator for what we're going to see in the dollar index later today. This is the chart I was talking about. So there are a lot of annotations on here, but basically I've just gone through all the major events that have occurred throughout 2022 and why we've seen the sort of price action that we have. So basically we saw the highest price in 2022 for cable on the 13th of January. And since then, we saw a peak to trough drop of 24.6% on cable. So pretty savage stuff. Obviously, the Russia launching the attack on Ukraine was pretty early in the year, and that kind of set the wheels in motion for the downtrend here. And since then, it's just been fighting things like inflation, Fed rhetoric, interest rate rises, consumer confidence, all of which have been against this, and forcing people to take flight into safer assets like the US dollar. We can see here this disastrous mini budget was kind of the end of that move. Then we saw the Bank of England rule out any emergency rate hike, which was kind of the trigger for then a bottom or a short-term bottom to be put in place. But you can see here that prices pretty much topped out when the Fed, the Bank of England and the ECB, and in fact the Swiss National Bank, all hiked rates pretty much in a period of 24 hours. And since then, prices have been on the retreat. We have seen a pretty impressive rally from the lows, though, a 20.18% rally from trough to peak in this corrective move, but it looks as though maybe that is starting to stall. We could see some sort of pullback in that in the short term. Let's take a look at some of the yen pairs. Start off with the dollar yen. That continues to find support at the 130, 150 level. Again, still looking for lower prices here. It is still trading in this bearish channel, and that would indicate that we are likely to see some more yen strength, which again wouldn't be particularly healthy for stocks, I don't think. Obviously, we know yen's been absolutely beaten up, but maybe this intervention now is actually going to stick. They've had a number of attempts at trying to intervene into the currency, which have generally failed. But maybe this one they are a little bit more serious about. I'm going to throw some serious weight behind. So that is, I think, a key theme to watch throughout 2023. What is going to happen with the Japanese yen? I think I'll leave it there rather than going into too much depth on other currencies, unless there are any requests for us to look at anything, which it doesn't look like there is. So we will come back to these early next year and have a look at how they're potentially setting up for January.
Nice one, Joe.
We'll take a look at some indices, Steve.
Yeah, I'll take a look at some indices. So yesterday we were talking about the Santa rally. Let's take a look at Dow first. And this sort of like Santa rally seemed to start on the 20th of December and finish on the 21st. Yesterday we had a big pullback in price action after stalling at a really decent level. It was a previous support level. We had it drawn on the charts, 33,425. If you remember, that was my target for the gun to head on Thursday, and it hit it almost exactly, and then sort of like reversed really sharply. And that's the reason I didn't sort of like trade the indices yesterday. It did feel like a little bit of a pivotal moment, and really didn't sort of have enough information to sort of like confirm or go with that trend higher, and it did reverse sharply. So maybe a missed opportunity on the sell side there, because it was a decent level, but I didn't really think I'd sort of like nail two on a spin for that. Sorry, let's take a look at, well, levels to watch, 33,425. On the downside, we've got the crossover, golden cross on here, 55, crossing over the 200-day moving average. That's a really positive sign, but I wouldn't hang my hat on it yet. I think we need to sort of like find some, making sure this 32,400 or 500 level is solid. Maybe another retest there before marching on. Overall, this looks like a bit of a topping formation. So I think further downside in the new year, once we, if we can manage to get below 31,700, it really opens it up. But you can see the sort of like makings. If you ignore this candle here, this looks like a fantastic head and shoulders formation. We can't just ignore candles, obviously, but the rejection after the spike, I think that was a CPI number. And the reversal from there has been quite significant, and yeah, looks negative overall as we start the new year. Santa rally's over. Nasdaq has been under a lot more pressure over the year as well. The technology stock's taken a big hit, and yesterday's price action was a bearish outside candle, which is pretty negative after the potential for a morning star formation. So we are below all of the moving averages, all pointing downwards, 5,500, 200, all pointing downwards. And I think we can say that this potential inverse head and shoulders has failed. This was looking like a triple top. The neckline obviously around about 11,000. It's quite clear around 11,430. And we didn't even really get a retest of it. So Tuesday's rally stalled well short of it, and we reversed lower. So overall, the measured move target for that we can see on the chart at 10,700. Wouldn't be surprised to sort of like see that break there aggressively. And if we look over the year, we can see that this really does open up a bit of a vacuum as well, potentially down to 8,000. 7.5, 8,000 in Nasdaq next year. See the top formation, and for me, we're trading at the neckline of this. You can even see it with the volume on the side. So, yeah, pretty significant. Doesn't look rosy at all. But maybe later in the year, as Joe says, we'll sort of get a little bit more risk-on approach. The bearish channel on S&P on the weekly chart is we've retested, we spiked through it, but didn't hold. And again, that's a bit of a similar formation. If we manage to get below the 3,280 level, then we could open up a little bit of a accelerated move down to 3,000. So overall, that high put in place at the start of last year looks a long way away now. We're almost, well, let's measure it. I mean, at one point we were down nearly 28% on the year. Currently trading down 20% overall on the S&P since that high. Looking at DAX, we broke up through the downward trending resistance. This is the weekly chart, and rallied and stalled at the previous support level, now turned into a decent resistance level. And you can see from a volume perspective, that sort of like signifies quite a decent top as well. And since then, we've had a couple of weeks of really negative price action, and this week doesn't seem to be doing anything to install any support in the market. So further downside on the S&P, on the DAX. Taking a look at this double top formation, played out really nicely, hit the measured move target and reacted higher from there. But again, yesterday's bearish outside candle is pretty negative. We've got the crossover on the daily chart, which is the only positive thing I can think about saying about this chart. So, let's see how we sort of move into the new year. Will there be any positivity? It's key that we hold on to this level of support around about the 13,500 level. If we break there, then we could be under a lot more pressure. Let's try and get the volume chart. Yeah, I mean, there is a lot more support down here, but you can see we're trading within this quite, doesn't look so bad then. Let's just take 2022 as a whole. We're trading below where we've traded for most of the year. You can see it's 14,300 seems to be where most of the price action has taken place. And we're trading just below there now. Yeah, doesn't really help me, that chart at all. So I'll get rid of it. But yeah, quite significant reaction downwards from that break of the support. And FTSE, finishing off with FTSE, we've seen the rally move into, Wednesday's rally move into, and Thursday's actually got a new high Thursday, but we failed to get above the previous Tuesday's high, which was the CPI number, and rejected quite aggressively from there. The resistance we can see clearly between where we are now all the way up to the highs of the year around about 7,700. And yeah, it looks like although we're getting the nice crossovers of the moving averages, that's the only thing that supports it. Otherwise, the structure looks to be quite a topping formation. So yeah, I think that's it from my side.
Thanks, Steve.
Got to come up.
Just one request on FX to come back to, which was for Aussie dollar. That's from Ali. Thanks, Ali, for getting involved. So this is my daily chart on Aussie US dollar. So as we can see, throughout 2022, we have been trading in a downtrend. We did complete an inverse head and shoulders bottom pattern here on the 10th of November. Really neat looking one. And we did actually hit the target as well on this one, which was at 68.73. Then we've seen prices trade within this sort of consolidation wedge. and we saw a breakdown below that on the 15th of December, and since then prices have remained below that level. So we've seen a couple of attempts at trying to get back above it, but they failed. And I think yesterday was quite a pivotal candle because we tried another attempt to get him back above it, but we failed and actually closed lower on the session to post a bearish outside candle there, engulfing all of the previous day's gains. We obviously saw a decent push to the upside and a negative close. So today we are trading within the body of that candle, a decent little rally underway at the moment. But for me, it looks like we are in corrective mode here and could be heading lower towards 65.22. And again, that kind of supports the idea that I've got about US dollar potentially forming some sort of breakout from an ending wedge in the short term. If we take a look at the intraday charts, it's also quite interesting because we can see that it looks to be in some sort of topping formation at the moment. Potentially a head and shoulders top here forming. I've got a neckline that I'd really like to see broken at 66.40 for this to really get going on the downside. So for me, it is a case of selling into rallies, and probably if I was going to sell it today, I'd be looking at something around 67.37 if this rally were to continue, with a fairly tight stop loss and looking for a break lower. Let's just visualize that, something along those lines there. And if we do get the breakdown from the short-term head and shoulders or short-term top pattern, then we could be looking for prices down to this kind of region here. So from a risk reward perspective, looks pretty nice indeed on the short side. That would be my favorite play on that today, looking for lower prices. Okay, let's move on to the gun to the head trades, because I know Steve's itching to tell everybody about his trade yesterday. And rightly so. So just a quick overview. This is where Steve and I pick trade ideas live on the video with as if we had a gun to our head. What would we trade right now? So we put these trades on at market. Each of the ideas have got stops and targets, and we close these trade ideas out at 9 p.m. UK time, or when the stops or the targets are reached. We post these up to our TradingView profile, which is at signal_center on TradingView. You can check them out. Yesterday, I was selling New Zealand dollar, US dollar. Looked as though it's forming a top on the short-term charts. Hopefully this is going to load. There we go. Nice head and shoulders top pattern there. We're selling into the retest of the neckline. And if we click the play button, we can see that that was nicely onside at 9 o'clock. I was actually 1.1 R on side, but still like the look of that. Still think it's going to go eventually and reach that target down there at 61.25. Then we move on to the man with the golden touch, trading gold. He was highlighting potentially a head and shoulders top. It was only potential at the time that he called it, because obviously it hadn't broken down through the neckline, which he had on the chart at 18.12. But if we click the play button, we can see it just pretty much tanked to Steve's target in a very short space of time. So he was out of that trade by 2 o'clock in the afternoon, making 2.67 R in the process. So well done to you, Steve. Great trade. That's 2 back-to-back that you've hit target on.
Yeah,
and that just takes you just shy of your overall P&L. So your highest was 51.93 R. You're currently at 51.76. That's a pretty good platform to start 2023 on. So well done to you.
Yeah, nice. Looking forward to that.
Should we take a look at the overall P&L
Yeah.
actually? So this is where we sort of, all add these trade ideas in based on risking 1% of capital per trade. As you can see, there's a lot of winning trades that have been posted over the last few sessions as well. So if we take a look at the overall standings, we can see that well, today will be my 700th trade. And in that process, we've accumulated 60.7 R with a win rate of 41%. Steve, 691 trades, an R overall of 51.31 with a win rate of 40. We can see the progress throughout the period of time here. For me, got off to a good start, then pretty much flatlined forever, it feels like. Still below that previous peak that I reached there, but Steve's upward trajectory is very nice indeed. He's just shy of his all-time highs, but collectively on the P&L, we're just below our all-time highs as well. And it looks like you could actually trade this technically as well, Steve. We saw a nice breakout there, a nice pullback, and having another go, hopefully, at some new highs.
Yeah, absolutely. Looking forward to the new year. We got to start trading that with real money, Joe.
I reckon so.
I think maybe what we could do, the sort of first few shows of the new year, maybe just go through the process of opening the account, and then going with it.
Yeah. I mean, the win rates obviously aren't fantastic, and that just goes to show by operating with a 2-to-1 risk-reward ratio as a minimum, it means that we don't need to have spectacularly high win rates. And don't forget, these are trades with a gun to our head, so we're not spending hours or a significant period of time researching these trades. We are just coming up with patterns that we kind of like the look of on a very short-term time frame.
Yeah, and I think it's key to see like them level. Actually, just go back to them stats, Joe. It's key to see that. I mean, we've been doing this a long, long time, and we've got sort of like stats with Signal Center going back to 2015, and the win rates for most of our analysts is around about 45%. So it's quite key to think about that. So every time we put on a trade, the chances are it's going to be a losing trade, but it's very, very important to make sure your risk reward is better than 1-to-1. Otherwise, we would be losing. So, and you can see the pips on there. I'm down 3,290 pips. I think that's because I traded, Bitcoin, cryptocurrency, and that sort of like obviously pip wise, there's a lot of pips there.
Yeah.
So yeah, you can really ignore pips. Don't think about pips. Think about percentages. Yeah. So overall, it's quite a decent return. So what I'm saying is, I think if we put more time and effort into it, rather than have it do this gun to head, our win rate might improve slightly, and you'd like to think the performance would improve slightly as well. But yeah, overall, I'm pleased with that. When we first started this, we had no idea whether this would work or not, and it sort of like stood the test of time. So we have got to start getting this onto a real account, make it a little bit more effective and impactful, and maybe we'll get a few people join us on the this journey we're having. So yeah,
Sure.
we'll look at that in the new year.
Yeah, I think you make a really good point about the pips. So many people I see on social media and signal services, etc., saying, "Oh, I'm making X amount of pips per day." Pips doesn't matter. It's all about individual markets and trading them with a solid risk reward setup. Is showcased there. Steve's down nearly 3,500 pips, but he's up 51R. Do you want to make money or do you want to chase pips? I think that's the key takeaway from that for me.
Yeah.
Okay, so let's move on then. Let's pick some new trades today. You got anything ready? I have, if you want me to go first.
Yeah, you go first, because I'll obviously let you have like first shot, because I feel sorry for you.
Yeah, fair enough. Right, so a few bits and pieces that are potentially lining up. I obviously looked at this yesterday as a head and shoulders setup. Nice little pullback that we've seen today and a rejection, so that looks quite interesting. But the one I'm actually going to go for is still linked to US dollar, but it's cable. Look at this setup. Nice head and shoulders top there on the 4-hour chart. Nice little rally into the neckline. So I'm going to sell that now at a current price of 120.56. I've got stop loss above this high candle that was posted on the 26th of December at 21.57. The chances of this playing out today are very slim, but the measured move of the target is down here at 117.22. So that gives me a 3.5 risk reward ratio on that. Obviously could go a bit more aggressive with that, but I'll leave that to Steve. He's the aggressive one here. He can be the aggressor today, and we'll see if he can bag another winner. Over to you, mate.
Oh well, I am like running around like a headless chicken at the moment. Really sort of thinking about where to
Buy your Christmas presents.
Yeah. Where to see if we were doing it with real money, I would be, wouldn't I?
Yeah.
Where to sort of like look for this this trade that sort of I don't know. It looks like it's escaping me at the moment, mate. Right, when I'm sort of like desperate, can't find anything in particular, I'm sort of like looking at commodities, and I'm sort of thinking, yeah, gold, nice little turnaround in the last hour. So maybe we're going to have another breakdown there, but obviously the overriding formation is quite supportive, so don't really want to go with that. Silver looks quite supported. I'll tell you what, let's go silver. For me, the one thing standing out here, again, I love head and shoulders formations. Inverse ones as well. Someone mentioned on the stream yesterday, you sort of like, you're talking a bit too much about these head and shoulders formations. I know, but they're pretty good when they work. So, desperately trying to find one somewhere. That doesn't look too bad. Obviously, it would be better if the shoulder was down here, but yeah, I'll take this one. Looks like we've just broken above out of the neckline, so it's quite a supportive structure. volume sort of like obviously quite high into this sell-off, and then we've got a little bit of support coming through. So yeah, I'm going to go with buying silver. So let's get the risk reward right here. Buying it at 23.74.70. Oh, platinum. Let me just get this. Stop is at we can do it at 23.59. How about that? And the target, well, let's make it the stop is 23.58.70, and the target could be a nice modest 2-to-1. Target is 24.06. Will that play out by the end of the day? Not so sure, but we'll have a go anyway. So buying silver, measured move target for this inverse head and shoulders formation would be, yeah, basically $24. So that's what I'm going for. Buying silver, stop just below, and targeting a move to 24.06 just to get the 2-to-1 risk reward.
Okay, lovely. Good luck, Steve. So there's two trades for you. One selling cable, one is buying silver. Obviously, feel free to check those out if you want. They'll be posted up to our TradingView profile shortly. Now let's take a look at the data that's due out today. It is all about the US PCE prices index, which is due out at 1:30 UK time. Liquidity in markets is set to be low into this number. So this will be the last kind of major high impact release that we have before Christmas and probably before 2023. The expectations around this will be important because it will have a direct impact on monetary policy. The consensus forecasts are for the core annual rate to retreat to 4.7% from 5%. So we're hoping to see a drop in inflation. If anything comes in higher than that, then that could potentially spark a major sell-off, I would say, today. So do be careful because of obviously these lighter volumes. It may be that markets move in a fairly erratic way. So when we come back, the first number that we've got pretty much on the first working day of the year will be the US ISM Manufacturing Index. And then following that, later on in the week, we have the non-farm payroll number, which is due out. So no rest when we come back into the new year. We're getting straight back into action, and we'll see what 2023 has in store for us all. So that's it from us, Steve, for Christmas and for the new year. We're going to take a break now from the market, spend some time with the family. So I might actually be back doing this by myself on Monday as a result of that. But no, it's all good. Have a great Christmas, everybody, and New Year. Thanks, everybody, for participating and watching. It's been great. And hopefully we continue doing the same in 2023.
Yeah, looking forward to it. Cheers, everyone.
Thanks, Em. Bye-bye.